Hey, good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. And today is Monday. Ladies and gentlemen, I hope you all had a fantastic weekend. I hope you're all feeling nice and relaxed and refreshed, so ready to hit the markets. And we do have a very busy week, in my opinion. Busy in a way because there's a lot of anticipation, and a lot of waiting for the Federal Reserve interest rate decision. We're going to have a look at that one because, again, because of the White House, I think this meeting is very well awaited. So, look. That's happening on Wednesday. We will have also the Bank of England, the BoE, coming out with an interest rate decision. So stay tuned. Do not tune out. Hopefully you enjoy the session. We'll talk about all that, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. Welcome, everybody. Hi, my name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. And today, ladies and gentlemen, is Monday. It's Monday. It's in the first Monday of May. So yes, it's the 5th of May today. Ladies and gentlemen, I hope you had a wonderful weekend, and now you're having a wonderful start of Monday, right? Nothing has destroyed your mood this morning, hopefully, and yep, you're ready to hit the markets. Look, we're going to talk about different things, different economic stuff that's coming out this week. So we'll pick up on a few charts. We'll look at it from the technical perspective. So yes, look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yes, so okay, and look, I mean, like I said, I hope you're ready to hit the markets. And in one moment, I have to also mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the first index here, and this is Nikkei 225 as always. So we had a nice clearance of this downside line, and in a way, everything seems to be somewhat on the positive side still. We're currently oscillating around the 100-day EMA here, shown as the blue line, if you can see it here. And we remain above this broken downside line. So in a way, there are indications that we could go further north, but at this point, I think that we need to be a little bit more on the careful side. So look, long story short, for now, like I said, I'm purely from the technical perspective, I'm looking at this from the bullish side. However, if we start falling back below the downside line and we fall back below the 50-day EMA, then yes, there is a little bit of a greater chance for this one to go for a larger correction lower. In terms of economic data, now let's have a look at what's happening with the economic calendar. So. Let me just double check if I have Japan here. Yes. So this morning, International Children's Day that they're celebrating. So I think Japan is off. Let me just double check something here very quickly. Yes, so today's the 5th of May. Yep, so tomorrow they're also closed. Japanese index is closed, but nevertheless, we had a spectacular move. This is the cash index, by the way, but in general, Nikkei is closed today and tomorrow. So keep your eyes on that. So let me just double check the economic calendar. Yep, indeed. But in terms of economic data, look, from Japan, Jibun Bank composites and services PMIs that are coming out on Wednesday. So keep your eyes on those if you are trading something Japanese yen related. And on Thursday, the BOJ monetary policy meeting minutes are coming out. So Again, last week we had the BOJ, so this week we're getting the minutes from that meeting where they kept the interest rate the same. Now on Friday we have a little bit more a more interesting day from the Japanese data side. I mean, we have the household spending, which is going to be very carefully monitored, because again, the household spending is potentially indicating an improvement here, because that has slowed down, and of course that's a little bit of a worrying signal. But we're very close. The forecast here is for a jump into positive territory, but only up until this plus 0.2%. So in a way, yes, great, good, good stuff, jumping, a lot in a way, but very fractionally above the zero mark. Oh, by the way, before I go any further, good morning as always in the chat room. Good morning, everyone. I hope you're all feeling nice, like I said, nice and refreshed after the weekend. By the way, let me know if you have any questions. I mean, you can always drop them here in the comment box, and yeah, we can go from there. So this live session is mainly for this purpose, so that you would be able to ask some questions, or we can just interact. Now look, China. Let's jump into China. So okay, China seems to be closed here still. Let me just double check what's happening with Shanghai here. Shanghai Composite. So there we go. So yes, we are closed, and we're going to open on the 6th. So okay, so this one is closed today as well. But look, I mean, we're like I said, we're also watching this one very carefully. We're keeping an eye on this little 200-day EMA right here, which in a way could provide good support if we do travel back to it. If we do clear it and we do drop below the 200-day EMA, I'm going to lean a little bit more towards the downside, and I'm going to consider slightly lower levels. I'm not saying that I'm going to go crazy to the downside. No, I think I'm going to just go for this little territory around the 12,000, kind of 700, 650 zone, and then we'll go from there. The S&P, the Dow Jones Industrial Average, let's have a look at this one. So we're seeing a little bit of weakness here hitting on the cash index. Look, we still broke through all of these trend lines, and in a way everything's kind of pointing more towards the upside. Look, you know what I really want to do? I really want to get rid of everything and start fresh. You know what? I don't want to get rid of the Markets.com logo, so let me just you know what? I'll add it later. So let's do this. Let's have a fresh look. Now, first of all, we're now climbing higher, and it seems like we're trading above this little short-term tentative upside support line taken from the low of the 7th of April. So now, if we continue to trade higher, and what I want to say is, like, we're also trading above some key support areas, which are now support areas, but before they were key resistance barriers. Now, one of the barriers here is this 40,945 zone ish, but in general, I think I prefer the 41,000 zone as well. Now, also the fact that we climbed back above the 40,000 in general, that's a major achievement. But now if we continue to trade above the 41,000 zone, I will, yes, continue targeting the upside. But again, I'm being very careful, very cautious. I'm only aiming for these EMAs for now, and then we're going to go from there, because if we can clear those EMAs, then yes, my next target is the 42,823, and then we'll go from there. The S&P 500, is also it's also pushing nicely to the upside, but on this one, if unlike the Dow, where we still have some room up until the rest of the EMAs, the S&P 500 already did test all its EMAs, and now we're kind of looking at this from the perspective of if we can jump above the remaining EMAs and we can stay above those, then yes, great. I'll continue targeting the upside, where my next target is going to be the 5,786 zone, and then we'll go from there. Of course, if we do clear this barrier, then we could go further north, but look, let's not get way too bullish here, okay? Because we're living in the economy where anything is possible. Everything is still up in the air. You know, the White House can always come out with some sort of a piece of information where they will, you know, turn around the market very quickly. So that's why I'm just being a little bit on the cautious side right now. For the downside, I would prefer actually to wait for a break of this upside line here, taken from the low of the 9th of April. If we can get that move, amazing. I will consider a move lower. If we can clear, we can drop back below the below all my EMAs here on the daily chart, and then yes, like I said, this is, and we can also break this little short-term tentative upside support line. Well, again, this upside support line is also, again, it's a little bit on the tentative side, but it can be drawn something like this. So it's a rough sketch, I would say. So you don't really, okay, don't really focus on this too much. It should not be that it's this your main you know, barrier to watch for the downside. No, I think that you need to keep an eye on some key areas of support instead. Like for example, this little territory here becomes quite an important one. Let me just highlight that for our future reference very quickly. There we go. So, oh, not this one right there. And this is something that, like I said, this is something that you could keep an eye on. Let me just highlight it a little bit more. Let's do 20. So this area right here, now that's around the 5,500 zone. And, you know, if we clear it, if we do drop below that, great. I think that more sellers here could join in. So keep that in mind. And NASDAQ 100 very quickly as well. So this one is still working with my Fibonacci retracement. And most importantly, we remain on this one. We remain above all my EMAs here on the daily chart. So this in a way points more towards the upside. Right. Now then, at this point, I think it's time to get rid of the Fibonacci retracement, and I think we can focus on something else instead. Now, the something else instead, in my opinion, is the economic data. Now, first of all, let's start off with Monday. We have the ISM Services PMI numbers coming out. The S&P Global Services and Composite PMIs are coming out as well. So, but I think that the ISM will be the more important one. Look, the problem is that we're declining, and you know, we still remain above 50. That's great, but we have been on a decent decline, and we're getting closer and closer into contraction territory. Now that's below 50. If we somehow come out below 50.6, I mean, or in general below 50, I don't think that this market will hold on strongly. You know, okay, it could you know, shift strongly to the downside initially, because again, I think that the main event will still be the Fed's interest rate decision, which is coming out on Wednesday. But I think we could have a very negative reaction if we do see the ISM continuing to slide here, and yeah, that, I think that would be a little bit of a bummer, I think, for the US indices. So coming back to this, so keep your eyes on this today. Like I said, it's quite an important economic data set that's coming out. And yeah, well, if you are trading something, like I said, something US related, then for sure keep your eyes on that one today. Tuesday, tomorrow, we have balance sheet. Yep, there we go. Trade balance, not balance sheet, trade balance coming out. So that's something to keep in mind. And this is what I said. Then on Wednesday we get the EIA crude oil stock changes, and I'm going to get into commodities in a bit, because again, that's something to pick up on. And yeah, look, the moment, I think that this is something to keep an eye on as well. The EIA crude oil stock change, but certainly the best event or the most anticipated event will be the Federal Reserve interest rate decision. And look, at the moment we're business as usual in a way. We're expecting this. We're expecting no action taken during this meeting. We can see that the percentage here sits at the probability for no rate cut or hike sits at 94 and almost 95%. But I think that what everybody will be carefully monitoring is the speech after. So look, this is important, yep, for sure. But I think that this is going to be even more important. The press conference, the half an hour after, because that's when we'll hear from the Fed talking. He'll say what he thinks, and yeah, I think that this is where I think everybody should be keeping a very close eye on. So, long story short, I think that, like I said, I think if we do see the Fed kind of reiterating things and saying, you know what, most likely we will go for a hike, or sorry, a cut earlier, and this would maybe mean that in June we could see that first cut. Since a while in a way, and we could see this percentage here, the probability of this percentage, the probability of this this column here rising. So and this is indicating a 25 basis point cut. Now this is, like I said, this is what the market is kind of keeping an eye on, and this is the market is trying to understand if this is what's going to happen, because everybody's thinking, did Powell budge in a way, like, or did he hear? I mean, most likely, of course, he heard, but then this is probably more of a rhetorical question here. Did he hear, what the White House has been saying about him in April? And yeah, I think that this is what this is what everybody will try to understand. Is he gonna, not, I won't say bow down, but is he gonna listen in, and if he's gonna consider the cut earlier? Because as we know, looking at this table here, we are currently expecting how many, like 3 cuts? Sorry, 1, 2, 3, 3 cuts by the end of this year. Before we even had like 4. At one point, I think we even had like a higher probability for 5 rates, but that was crazy. Yeah, how many cuts we're gonna get now? At the moment, we're on track for 3, but everybody's like thinking, are we gonna see a higher probability here in June? If so, maybe this is where the market could kind of continue rallying, and could benefit here. So again, a lot of things on the table. We'll keep an eye on the Federal Reserve interest rate decision. So yeah, I'll get to UK stuff in a bit, because they're also having an interest rate decision. Thursday then from the US, nothing major, and on Friday we do get. So let's have a look. We don't get really much. That's kind of it. So yeah, the big event for the US will be Wednesday. So let's keep an eye on that one. Now let's jump into the dollar index. So look, in general, the fact that if we're not gonna get a rate cut during this meeting on Wednesday, then I think we could see the dollar kind of pushing back up a little bit. Look, I talked about this a lot last week. I said to you, keep your eyes on this potential neckline, this downside line, which is the short downside line, because we could possibly be seeing ourselves here a nice little inverted head and shoulders pattern. We broke the neckline, we pushed higher. I said keep your eyes on this upside line, which is taken from the lowest point of July of 2023. So we tested it beautifully, it provided good resistance. Now the question is, can we jump above it? Now this is where I'm watching, this is what I'm keeping an eye on. Some of the levels need to be adjusted. So this one, 99.85, I think, okay, it was a good area. Thank you very much, we had our fun. Now let's keep an eye on this, the high of last week near the 100.17 zone. If we can get a nice clearance and we can jump above it, we also jump above this upside line, which I talked about in just right now, and then we could go and consider some higher levels. But again, these higher levels are part of a larger correction to the upside, because before another possible leg of selling. Because again, don't forget, overall we're in a downtrend right now. What we're seeing could be just a nice part of little correction, and that's absolutely fine. But let's not, again, like I said, let's not get way too excited, or should I say the bulls should not get way too excited yet. There is a chance for this one to jump higher, but certain confirmation breaks need to be accomplished first. So and for the downside, now I think I'm going to take a very conservative approach for the downside. I'm going to get rid of this hurdle. I'm going to recycle this line here. Yep, always recycle, ladies and gentlemen. There's a hidden message for you there. If we do drop below the 98.65, I will consider a move lower. Not only a drop back below this downside line, which is seen as the neckline, but also actually preferably a drop below the right shoulder right there, of an inverted head and shoulders pattern. Right. The German index DAX. I mean, this is a train. This is a German locomotive which is not stopping. It is just plowing through, and that's kind of it. Honestly, it's really difficult to find good resistance on this one. If you're trying to short this, I said before, last week I said that I'm gonna continue targeting the upside. If we do pop above the 22,573, I'm gonna go to that 23,200 zone ish initially, and from here we might actually end up traveling to the all-time high. Look, we're not far from the all-time highs, and it would be really like a little bit of a bummer, I would say, not to create a new all-time high for this year. Look, it would be just a total what's the word, like it would be a pity to not to create a new all-time high on this one. But look, for now I would say this way, let's not rush. And if I'm seeing this, a lot of traders are probably seeing this as well. So that's what the market always kind of, if the whole mass starts to see things like this, it really depends. Sometimes the market kind of plays along and goes with the whole mass, but sometimes stop losses can be taken out. So look, for now I would say it this way, I'm leaning towards the upside. But would I do anything about this right now? No, because for me this is just insane. I mean, to go up to buy here at this point, I don't really like to do this. I really don't like to let's put it this way, I don't like to chase the market. For me, this is pure chasing. I might be wrong. Like I said, I'm still bullish and I still consider higher areas, but again, you need to approach this from a very careful side, and you don't really go and do anything. So, ladies and gentlemen, I can see that there are people who are putting likes here right now on my webinar. So thank you very much. I really, really appreciate that. Thank you for all that. Look, if you have any questions, honestly, drop them in the comment box, and we can have a nice discussion here. Feel free to ask questions what's bothering you, or market wise, of course. Look, thank you very much, first of all, for showing up. Really appreciate that. I really, really do. So, in terms of the German index DAX here again, for me at this point in time, I would like to see a drop back below the 22,573 territory in order to go lower. But you know what? I think that also we could start looking at some lower levels from around here, from around this 22,723-ish zone. Okay. Or actually, you know what? This is even better. Actually, this is even looks a little bit more interesting. This 22,820 zone. Okay, you know what? I think that's quite good. So even if we do a retracement back down, as long as we stay above this territory, I'll continue targeting the upside. But if we start falling below that, maybe a bit of a retracement here back down could be possible. Let's see. Let's see what's going to happen here. But for now, yep, it's like I said, it's one-way traffic. Just be careful what you do with it. I know it's tempting to go short, but if we are on track to create something like a double top pattern here, I would say yes. I mean, that maybe, that we could still go a little bit higher here, maybe find resistance near the all-time high, and then kind of reverse back down for a little bit of a retracement. I'm really itching to, at one point, to kind of do this and find like a little bit of a nice top from where we could reverse, and then kind of consider the Fibonacci retracement. But at this point, it's really difficult. Talha, hey, can you explain the effect of eliminating Powell by Trump on market? Hey, Talha, thank you very much. I think, if I'm not mistaken, were you one of the people who joined my Zoom webinar on Wednesday? So I hope it's you, but Yeah, thank you. But anyway, if it wasn't you, still, thank you very much for the question. Eliminating Powell on the market. Look, very in my opinion. Again, what I explain here, it's kind of purely my opinion. And again, there are different analysts who go from a different perspective. But in my opinion, right now, Powell has not done anything wrong in a way to disappoint the market. On the contrary, he has been very supportive. The market with him, has been, rallying, and it was, maybe somebody might say, well, okay, maybe it's just the cycle, that he managed to be at the right time, in the right spot, at the right time. But in general, if we go from what we have, he has not been a bad, chief. So, and when if eliminating him, I think that it would just show that, look, you cannot really count on the Fed in order to save the market or something like that. So the Federal Reserve should be that independent entity which should kind of help the U.S. government in a way. It should be like that independent body. Okay, we all understand that there are talks behind the scenes and they're all communicating, but the public image is that. So the public image is that they're independent. They need to be not going hand in hand with the White House. So that's why it's like eliminating him, it would be a really bad thing for the stock market. So the stock market sees kind of the Federal Reserve as like the other final resort, which could help out save the stock market. We do understand that political parties, politicians come and go, but the Fed kind of tends to stay around for longer, and they kind of tend to be that go to help buddy for the stock market, right? So when you're trying to mess with the Fed in a way, you're ruining that public image, and in a way you're showing that if you're getting rid of something stable like this, then you're also kind of what to expect, why I should invest into your economy. And that's the thing. So that's what people are afraid of, and that's why you need to kind of play this game, that you need to show that the Fed is independent. And basically, if you're going to just blindly eliminate him, you need a very good valid reason. The fact that you just like him or you don't like him, no, that's not a valid reason. So you need to kind of find a good reason why you should you want to eliminate that person. Look, of course, it's all debatable. Somebody might say, he's a good guy. Somebody might say, oh, he's a bad guy. And I personally, I don't have any strong feelings neither. I mean, I have strong feelings for the market. For me, interesting what's going to happen with the market. It's just I tried to go from some sort of like common sense in a way, and just to see what's what looks logical and what doesn't. Even though I might not be like in support of one or another. I just try to apply logic and see at that point the actions which are taken, do they make sense? So at the moment, for me, it doesn't make sense if you get rid of him, or we need something a little bit bigger than that. So Tala, I don't know. I mean, I don't know if I answered your question. Yeah, but let me know. But thank you very much. Really, really appreciate your comment in there. Thank you. So the FTSE 100, boom, explosion to very nice explosion to the upside here. Let's have a look what's happening here. Wait, yes, the bank holiday here in UK, if that's correct. Let me just double check. Where's that, London? Yeah, it's closed. So, right, okay, that's absolutely fine. So they're going to open up tomorrow. Tomorrow, do we have anything from UK? New car sales, that's quite important, to be honest. I think that just double checking very quickly the camera if it's working, because again, last time I think I had a situation where I kept on talking, but then at the end of the webinar the camera just froze, and like that's it, kind of. Yeah, so yeah, new car registrations from UK, that's quite important, because again, they have a big automotive industry sector. So, and they do really rely on their sales into the U.S. And we know that the U.S. has put tariffs on the car sector, on the UK car sector, and yeah, they're now in negotiations trying to abandon all that. So yeah, I mean it's a big mess in there. Now, I think, okay, look, there is a bunch of data. Construction PMI coming out on Wednesday, but of course the main event will be on Thursday. That's what everybody's waiting for. Interest rate decision. We are expecting a cut. We're expecting a cut, and I think that the market is rallying on that. We are expecting that cut. Tala, honestly, throw questions out there. Look, let's do it this way. I mean, everybody who's watching right now, you can throw your questions out there. That's absolutely fine. Look, I have the list which I need to go through, and in between there, like I said, I'll look at the questions. If I can see that if I have time, I'll be more than happy to answer. But to be honest, I always have time for questions, because I think that this is something very, very important. So shoot, feel free. If I know the answer, or I think I know the answer, I'll say I know the answer. But if I don't know the answer, I'll tell you, hey, you know what? I don't know the answer, but I'll try to find the answer for next time. But yeah, shoot away. But yeah, coming back to the situation here with the FTSE 100. Look, I mean, again, like I said, I think that this is right now rallying because of this expectation that we're going to see a rate cut. Again, how far are we going to go lower? That's a good question. At the moment, the BoE is kind of in line with, with the Federal Reserve, and yeah, I mean, it's like, they're trying to drop it all the way to I think where the U.S. is, and yeah, I think at the moment. I think the BoE is going to be the first one to drop lower. So I think that they're going to overshoot the Fed. Let's see. Again, we're seeing the FTSE rallying here. That's fine. Again, another V-shaped recovery. I mean, this is crazy. So that's why I'm not touching this right now. I'm observing the price action. So far, so good. After I said that if we do break this downside line, I'm going to go to the upside. Hey, everything's working out nicely. So I think my next target is 8,759.60 zone. Looks quite attractive. So let's jump into the commodity world, ladies and gentlemen. The commodity world is looking very, very interesting. So here, look, gold. Okay. First of all, getting rid of everything and starting fresh. We did have this Fibonacci. I'll bring it back a little bit very quickly here. We did have this Fibonacci retracement here, and we did find good support near the 50% on the Fibonacci retracement. So look, at the moment, I'm gonna be very cautious. I think there could be some more downside on this one, but for me to consider the upside scenario, I think that we need to see a push somewhere back above the 3,300 zone at least, and then we could consider a move towards this 23.6 again, which is around the 3,371, 72 zone, approximately around here. If that gets cleared, amazing. I'll go for some more upside. But yeah, at the moment, I'm being very careful. I'm being on the cautious side a little bit, and I don't really want to rush into things, because again, I don't really believe that we are done with the downside. It's a good retracement, but again, let's be very careful for now, because if the US dollar is gonna pick up the pace, maybe this could, like I said, have a nice little reversal back down. Okay, look, another little, let me get rid of this Fibonacci. Another little issue that I have here, which in a way kind of supports the upside scenario. But again, maybe this is the case, maybe not. Let's see. But maybe this is a nice little falling wedge pattern. If this falling wedge pattern is the one to watch, then of course, yes, we could see a nice little breakout higher here, because again, falling wedges, according to all the TA rules, tend to break to the upside. But again, we need to be, like I said, while we remain inside the pattern, we could still drift lower. By the way, Tala, I cannot see the question. I think either the system is lagging a little bit or what, but the question has not come through yet. So I don't know if you're if you did, or you maybe decided not to ask that one. But anyway, so I don't see the question yet. Thank you. Look, silver. Let's jump into silver very quickly. Again, we had a good rebound from the 100-day EMA. We tested the 50-day EMA, and then now we're drifting a little bit lower, which is fine, which is okay. I think, like I said, I'm really careful at this point. For me to start looking at the upside scenario, I would prefer to wait for a push above the 50-day EMA right there, and then we could go from there. If we can get that move, great. But I'm not, like I said, I'm not in a rush yet. I'm still somewhat bearish, but probably the easier option here is to wait for a drop below the 100-day EMA, which is roughly around the 32 mark. If we do fall below the 32 mark, I think we could go even lower towards the 200-day EMA right there. Let's jump into oil. So one of my beloved instruments here, oil, and look at this. I think the reports came through that yeah, we are seeing an increase that on Monday OPEC Plus agreed to ramp up production, fueling fears about global supply glut. So okay, so we're basically increasing supply, which is fine. Look, another thing to mention. Sorry, I had to drink a little bit of tea. Another thing to mention is that this worked out like a charm. I talked about this a while ago, and in April, mid-April, I said we're in this nice little rising channel here, but the overall picture seems to be like more of a bearish flag. Well, it worked out. That's great. So it worked out. Now we're chilling. Now we're taking a little bit of a pause because I don't want to, like I said, I don't want to rush into things. My targets are getting met. That's absolutely fine. So I'm happy with this. So we cleared my 57.26 territory right here. But okay, we cleared it, and then we're struggling to stay below that. But at the moment we're just bouncing around. So let's see if we can stay below that. If we can, great, wonderful. I'll go more to the downside. This arrow needs to go out of here actually, and I think at this point even we can, if you're a little bit on the cautious side, if you're thinking, hey, you know, I don't want to jump in right now here because it could be like chasing the market, but that's why you keep an eye on the 55.10 zone, which is the lowest point of April. So yeah, I mean, that looks quite attractive if we can clear this area. Oh, excuse me. If you can clear this area, this will confirm a forthcoming lower low, and this opens up nicely the path towards much lower areas. So in general, I'm targeting that 50 zone. I do like the idea of oil reaching the 50 zone. So of course, if you're an investor, that's not really good, and especially if you're investing into something like CBX, like Chevron, or, you know, like XOM, ExxonMobil. These guys are not gonna feel the love if, you know, oil continues to slide. But for example, the CVX stock, what I'm looking at here is, look, of course, normally you don't really apply technical analysis on stocks, but you know, occasionally you do. You mainly go from the fundamentals, by the fundamentals, but looking at this picture, it seems for me like a nice little bearish flag formation. So I really, you know, I don't want to rush into things, but again, this looks like a bearish flag, but a confirmation break is needed. Look, we had good numbers in general. Last week we saw, on Friday, we saw Chevron kind of releasing their statement here, the earnings, and that's what we got. Now, like I said, for me to look at this from the, like I said, from the bullish perspective, I would need to see the stock pushing back above all these EMAs. But for now, it's not really doing the thing. Let's jump into natural gas very quickly. Yes, beautiful pop here. Look at this. I mean, look at this move to the upside. We cleared the EMAs, and most importantly, this is a good example when a falling wedge works out nicely. There we go. Boom, to the upside, cleared. Look, if you missed the rally, I would say just be careful right now. We could see some more action to the upside. However, I don't want to rush into things. If you miss out on something like this, then look, just take a pause because again, we're approaching this key area of resistance near the 3.74 zone. If that gets cleared, I would go for a further move north here, and let's go like, I would go for something like this. But again, let's see, let's wait and see. For now, it's really unclear. Coffee, one of my beloved ones, drifting back down. Okay. Look, this is no longer needed, I think, or we can actually recycle it. There we go. There we go. Like this. Look, at the moment I'm aiming for that 50-day EMA. To be honest, I doubt that we're not going to reach that. But anyway, let's see. And then if we clear it and we stay below it, then yes, great. I'll go for that 100-day EMA. Another my very much liked commodity, sugar. And we're near key support zone, which is the lowest point of 2022, and that's around the 17.19. We're still slightly above it, that's fine, but in general we're kind of bouncing around there. Let's see what's going to happen next. And cotton is pushing nicely to the upside here. Wonderful. Yeah, now the question is, I mean, this is a beautiful reversal. This is one of my favorite commodities, and the question is, can we clear this little territory right here, this 200-day EMA, which provided fantastic resistance recently. If we can clear the 200-day EMA, I'm leaning towards the upside. And finally, for dessert, ladies and gentlemen, let's have a look at the crypto world, Bitcoin. So first of all, getting rid of a few lines. So this line, this upside line, no longer needed. It did its job. Fantastic, thank you. This little support area, nope. Now we're watching the high of last week near the 97,867-ish zone, something like that. Okay, look, the 100 zone is not off the table. Also, we're considering maybe a little bit of a retracement here at some point. So basically something like this could be possible. This had a good run. I think now we're seeing a little bit of a retracement. Maybe we could even retest the EMAs. If so, I will consider a move back up. If these EMAs do provide good support. If they don't, and we start falling below the 88,734 territory, then hey, well, this could end up badly for the bulls, and we could see a test of the 200-day EMA. Bitcoin Cash, one of my favorite ones actually. We're oscillating around the EMAs. Now, this is not really helpful. Initially, we were popping above the 200-day EMA. I was getting very excited. I said, like, you know what, this could actually, play out nicely here for the bulls if we stay. And we were staying above that 200-day initially, but look, now we're just falling back down here. I would say this arrow needs to go. I think that what I'm going to be keeping a close eye on will be the EMAs. If we do fall below the this 50-day EMA, I'm going to consider a move lower. Ethereum is holding on, but my problem is that overall we're still below all my EMAs, and that's kind of really pointing a little bit more towards the downside. So I'm not really in a rush to do anything here with the Ethereum unless it starts popping above the 50-day EMA, period. Ripple, okay, I threw out this piece on Ripple, and you can see, like, I talked about when it was near this key area of resistance. I told you to keep an eye on it, and I said to you that I'm looking at this 2.30 zone, and depends on how this is going to go. Maybe it could drift back down. Maybe this barrier, the 2.30, could become the barrier to watch, because yes, we could break the downside line. That's absolutely fine, but if it clears this 2.30 zone, then that's something to keep in mind. So long story short, Ripple is attractive. However, some confirmation is needed. Even the downside scenario for me is not really working nicely here, because I would prefer to see a drop below the psychological 2 zone somewhere there, and then kind of consider a move lower. Litecoin, let's have a look at this one. This one I also like. I like Bitcoin Cash and I like Litecoin. But the moment we have to wait. We have to play the waiting game here in order to kind of do something about it. And then we can, go from there. Look, Litecoin is, like I said, it's an interesting spot here. So let's wait and see. Dogecoin very quickly. Dogecoin, by the way, I'll get to the Forex in a bit. Dogecoin here is stuck. It's not really struggling, so a push above the 50-day EMA at least would be needed. Polkadot fell back below the 40 zone. I don't know if this is a very bullish sign, to be honest. I mean, of course not, but still, look, it could present itself with a nice opportunity if it pushes and stays above the 50-day EMA. Let's jump into the Forex world very quickly. I did kind of mix it up a little bit today. So look, I talked about AUDUSD, and I kind of mentioned this this pair when I was talking here, when I was talking about where's that video here? I think it was on last week. Yes, I was basically covering. Yes, this is what I was covering here on Friday, and basically it is working out nicely. So we did pop above the 0.6450 territory. This is what I've mentioned here in the video, so you can have a look at it. I warned you about this one. I really liked this setup, and there we go. Boom, fantastic. So what's next? Well, at the moment, in a way, I would say I'm leaning towards the upside, but again, my problem is the potential of for the US dollar to get stronger a little bit, at least in the short run. So that's why I'm going to lean on the upside here. I'm going to lean a little bit higher towards I'm going to lean towards towards higher levels. There we go. That's the words, and then these are the words that I was looking for. But I'm going to be very careful around the 0.65, 50, 40, 50 zone there, and then we'll take it from there. But at this point, like I said, it looks nice, looks positive. There are a few things that could drive this one higher, but let's see what's going to happen. Look, what could happen in a way. If we know that the Fed is not going to go for any rate hikes or cuts, I mean, for sure not hikes, so not really in support of the US dollar. So the US dollar could rally up until the Fed, and then, after the Fed comes out, and then, maybe they will say that they're willing to go and cut. So up until, today, maybe we could see this one bouncing around here somewhere, staying, as long as we stay above the 0.6450, there is a good chance for this one to drift further north. Let's keep an eye on down. AUDJPY very quickly. We're near key resistance. There we go, ladies and gentlemen. Look at this. We're near key area of resistance. And for now, I'm watching this one. And I said to you before that if this area provides a strong hold, yes, we could see a drift lower. So keep your eyes on down. If we do push and stay above it, and we also push above the 100-day EMA, well, this is opening the door to some higher levels. But look, at this point, the problem here is that, look, this pair is our risk on, risk off monitor. So we understand if everybody's buying stocks, this pair goes up. But at this point, we're near a critical point. We understand clearly because we looked at, for example, the Dow here. We're seeing a little bit of a slowdown. So look, if we get some sort of positivity in the stock market, I think this could actually travel a little bit more to the upside. I'm talking about this pair, this AUDUSD, NZD-USD, AUDJPY, sorry. NZD-USD looking good as well, trying to make its way higher, but not like AUDUSD, which made a new high, recent high. So NZD-USD is approaching key area of resistance, or at least trying to. So for me, this is very straightforward. If we do clear this 0.60, 30, 37 zone, something like this, then yeah, I'll consider some higher areas. I just looked at the one chart. Was it AUD? Yeah, the AUDNZD. Look at this. Yes, we can see clearly how Australian dollar right now is trying to recover what was lost against the New Zealand dollar. USDJPY very quickly. There we go. Look, we're stuck again. I'm considering slightly higher levels maybe up until the Federal Reserve, but again, let's not rush into things for now. Be very careful. If we start falling below the 144 zone, I think that there could be a bit of a chance here for some downside. USDCAD still remains within the falling channel pattern. I talked about this. I warned you last week. So look, to me, these patterns tend to break to the upside because, again, whenever we have a strong decline like this and then a gradual decline like this, you kind of wait, of course, somebody might say, but hey, couldn't this be a continuation pattern? Well, from what I have been seeing from my history, this tends to break higher. Either way, I think that the easier approach here would be just to wait for the confirmation break. You get the confirmation break, you can do something about it if you are comfortable with it, of course. But if you don't get the confirmation break, then just kind of chill, honestly. Like, just don't really do much. And most importantly is actually, I'm loving the fact that the hurdle here, this 1.3780, is providing strong support. If we can clear this, if we can get a nice, let's say, support clearance of this area, then I would go a little bit lower. Now, what could support the Canadian dollar here? Let's have a look in terms of Canadian numbers. So also trade balance, IVPMI, there we go, which is coming out tomorrow. Keep your eyes on that one. If we somehow get a higher number, that's wonderful. But at this point, yeah, we're seeing a decline. So just be careful. Like I said, if you are trading something CAD related, Canadian dollar related, then, well, IVPMI is the one to watch. Not to mention, of course, the Federal Reserve. Of course, I understand that that's affecting the US dollar, but still it will have effect, on Canada. And if you are trading Canadian dollar, could have, like I said, an interesting moment there as well. In terms of other data from Canada, nothing major on Thursday. Friday, average hourly earnings, so job numbers from Canada we're getting. So if you are trading, like I said, Canada, something Canada related, keep your eyes on Tuesday, tomorrow, IVPMI, and Friday's job numbers on Canada. So for now, I think that this could stay here somewhere. I don't think that this could make any big moves or anything like that. So for now, just observing the price action. USDCHF very quickly. This one's stuck, and I think it's more of like a, whatever DXY does, this copies. So it's more of like a, for me, it like looks more like just like a copy of a DXY. EURUSD very quickly. So far so good. So yes, this is still holding above this upside line. So in general, the general approach is that if we continue to trade above the steep upside line, then yeah, we'll continue targeting the upside. Very simple. If we're looking at some lower levels, well, I'm going to take a bit of a conservative approach here, and I'm going to wait for a drop below this downside line in order to go lower. Yep, period. That downside line is taken from the high of the 18th of July of 2023. Quick update on EUROJPY. I'm loving this pair. Honestly, this is a big tease. 164 zone, this one right here is yeah, providing so far good resistance. If we can clear that, wonderful, I'll go higher. Euro Aussie, there we go, beautiful break. Very technical. We are now approaching this 50-day EMA. This is where I'm going to stall. This is where I'm going to take a pause. And if we do clear this 50-day EMA, then wonderful. I will consider a move towards the 100-day EMA. Let's have a look at GBPUSD very quickly, because again, if you are trading something pound related, well, you should keep an eye on Thursday, because then that's when we're going to be getting the BoE interest rate decision. And look, at the moment, the expectation is that we're not going to see something that could support the British pound. But and that's why I'm leaning a little bit more towards the downside here. Yes, but my downside scenario will come on a drop below the 1.32 zone-ish. 1.3207, 1.32, that's what I'm going to keep an eye on. If we can clear that one, wonderful. I will go lower. I will aim for that 50-day EMA, and then we'll take it from there. And finally, I think that's kind of it, to be honest. I think unless somebody else has any questions in terms of, what are they looking at? What are they trading? Maybe there's an interest of their, maybe there's a pair of their interest, or maybe another instrument. But hey, let me know in the comments. But if you don't have any more comments in general, ladies and gentlemen, in that case, I would like to thank you. I would like to thank everybody who tuned in. Tala, thank you very much for your comments in there. I really appreciate that. So this is what I encourage everybody to do. Look, there is the session where you can, we can grab a cup of coffee, tea, whatever, and just, sit down and have a talk. And, we pick up on the markets, we see what's happening, a little look at the economic calendar, and we look at the potential possible moves in some instruments. And then we can go from there. But look, ladies and gentlemen, okay, if there are no questions, let's wrap it up here. Thank you very much for watching and listening. I really appreciate that. As always, stay safe, have your stop losses in place. Risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you on Wednesday, the same time. So this session runs from Monday, Wednesday, and Friday. So yeah, I'll see you on Wednesday. Thank you very much, and bye-bye.